Yo, this is Noble. Welcome to Insider Trading. We're gonna have some fun tonight. We got a lot to cover. A lot of stocks, the VIX. Got to talk about what happened in Japan. I started doing this month Monday and Thursdays because I figured it would be a good compliment to come back Thursday to talk about and see what happened based on what we talked about on Monday. So for the most part, I'm just gonna kind of follow up with where we picked up, where we left off rather. So let me give you guys some time to actually to log on. So when you do get on, let me know where you're from. Where you watching me from? I'm here in Atlanta, Georgia. And while you guys are logging on, I'm gonna do a quick check to make sure. Make sure I'm good. So again, welcome to Insider Trading. My name is Noble Woods. Let me do this. Let me check that stat post. So my group, our group, Insider Trading, is a group on Facebook. If you're in there, you get an extra special benefit because whenever I go live, I always ask in the group the same day, hey, give me 2 stocks. I'll analyze them for you using my tools. We can talk about whatever you want to talk about. It's rare to kind of get live analysis. A lot of people do it. Analysis, I mean, some of the bigger shows, MSNBC, Kramer, and all of those, they definitely analyze things live, but I think it's rare to see somebody analyze technicals, pull up the chart, flipping different time frames, really diving in, all right? So this is interactive. It's for you. And right now I am just double checking a link to make sure everything is up and flowing. Let's see. So I got all the stocks from you guys. Let's see. Let me make sure this is up. Okay. All right. So I am live. Just double checking some things here. All right. Yeah. So I am live. Just okay. So YouTube, I'm only like a few seconds behind. Now I just want to make sure I can see you guys' comments when you comment. Okay. There we go. I got somebody from Huntsville, Alabama. Shout out to Huntsville. Where was I at? I was in Alabama. It was just for like one day, but I stopped and ate on my way driving back from Texas. The food was amazing. I think I was at Birmingham. Yeah, food was amazing. This barbecue spot that I found, I think it was called Moons or something like that. Oh my God, the ribs were crazy. Who was that? Miss Sobe, Atlanta, JQ out in Charleston, South Carolina. Glad to have you back. I think you were on a call the other day. So let me pull up and show you guys what we talked about last time. Monday, we talked about Japan's crash. Again, I'll reiterate the story 2 seconds. My cousin, I was at Opryland, huge resort, water park, playing with the kids, younger, cousins, just kicking it with the fam for the weekend. And that morning, my cousin knocks on my door. He's like, yeah, the market's crashing, like globally. Japan is getting tore up. I was like, what? Hop on my phone. What's the first thing you do? I want y'all to remember this. What's the first thing you do if somebody at 5 a.m, before the market opens at 9:30, tells you the market is crashing? What can you look at to actually see where we truly are? You go to SPY, can't really see anything. Can't see anything until 9:30. If you go to Apple, not gonna see anything. Go to most ETFs, you're not gonna see anything. What you have to do is go to the futures market. Why? Because it's global. Japan opens at 6 p.m. our time. The Frankfurt, I think Germany, European markets open like 2, 3 in the morning. Years ago when I was working in corporate America and trying to figure out how to make this trading thing work, I would wake up at 3 in the morning to trade, right? So clearly I don't do that anymore now, but those early days really, they let me know what really moves the market. And then in a simple, again, what can you look at that's giving you the actual data? Well, the S&P futures contracts, which we'll take a look at today too. We'll actually take a look at the Monday, Tuesday, Wednesday, and today. We'll take a look at all this week, see what actually happened after Japan's crash. Their market was down. I think we looked at this Monday from the last swing high, which was like last week. It was like 19%, 12% that day, but 19% just over a few days. That's crazy. That's amazing. Unfortunately, when I say amazing, I mean rare. Worst day since 1987. All right, so very very rare. All right, so what does that mean for you? The VIX was at 50. We talked about the VIX and S&P. We'll talk about the VIX and S&P again today. I'll pull up the VIX. We talked about bear season. I'll show you that really briefly. It's August, September, October of every year. One of those months is usually going to get a couple weeks of a quick downtrend. All right. Several weeks precedingly going lower, lower, lower. Is it over now? Is this it? Is bear season done? We still got all of the rest of this month. And then 2 more months, which traditionally September or October really are the months that get generally hit. This is just August, right? Are we going to go back down and test the lows? We'll take a look at that too. The one thing I kind of want to cover today before I get to you guys' stocks, because I have, let me check. Let me check and see real quick. I have from our group on Facebook, I have Shelly asked about. I asked people to give me 2. I do that not because I'm going to hit both of your stocks. I'm really gonna pick the one I like the most. I'll try to get through most of them, but I think, as you guys can imagine, when you throw out, hey, free analysis, let's look at what you're looking at. I can get a lot of names, right? So we're gonna look at Crowd, Lilly, CVS, Cat, Ford, Nike, PayPal, Tesla, AMD, Mara Shop, Intel, Crowd, Apple, NVIDIA, SPY, Sound, Coco, which I forget what that is. PLTR, I forget what that is too right now. Lilly, I know why you guys put Lilly. Lilly's earnings, it was up to like what, 880? We'll look at that too. Apple, Race, Google, and 1 or 2 others. So got a lot to cover. So let me start. I guess let me start here. Yeah. Let me start here. And I want to actually move this in the corner so I can see what I'm doing. And so you guys can still talk to me. Feel free to, as we're going through the stocks, you can't ask questions, but you got to log in. So I know for my folks on Facebook, you guys are used to seeing me live on Facebook. I put the link at 8 o'clock, but you got to come over to YouTube. All right. Or you'll just be watching the replay later, which is fine. But if you really want to catch this live, you got to go to YouTube. So let's do this. Let's start real quick. I'll go to /NKD, which is the Nikkei, Japan's version of the Dow, right? Their version of S&P. S&P is like the all-star team. Why bet on one player when you can bet on all the best players by betting on the all-star team itself? All right. I'll take everything off my chart real quick. And actually, if I just look at the last, I'll go to a daily chart. So you can kind of see it here. All right. Huge drop right here. Matter of fact, if I just want to take a look at the high to low there, about 14%. If I look at just Japan really quick from their last highs, how much are they down when we made that low? About 28%. Right? Global market. So, of course, you're going to wake up. Everybody was talking about the VIX hitting 50 on Monday and Japan having some major issues. All right. So this is a chart. Just wanted to show you, start there, what happened this week. I'll zoom in a little bit. So Monday, Tuesday, Wednesday, Thursday. So we are back slightly above, like we're back above that day, right? That specific day. A lot of selling, but also a lot of buying. My long-term investors, I think, were on it. I saw so many people talking about buying. I know in our group, Insider Trading, which is free, a lot of people were talking about NVIDIA. Apple, just a sale. All right, so how do you recognize sales? I'll look at the VIX in just a second and talk about it. But as you can see, Monday, Doji candle didn't really go anywhere. Tuesday pushed up, tried to gather some momentum. Wednesday, really still inside this range of the last 3 days. And then oh, you know what? I forgot. Because this is futures. I'm sorry, this is futures. So this last day here, that's actually the 9th. I know you're like, wait a minute. Today is the 8th. Yeah, but in Japan, it's the 9th already. Right? So this 8-5 was Monday. Monday, Tuesday, Wednesday, Thursday, Friday, right? So this was Friday, the really bad day. Right? And we woke up that morning hearing about Japan. But a lot of people, of course, because prices were so low, they bought. All right, so finally got outside of that hammer candle. And I said this a lot last time. I know a lot of you guys are like, you're trying to learn more about trading. You're watching right shows like this to learn more, to gain more, to get some real insight. There's a ton of candlestick patterns. A ton. There's so many. Matter of fact, look at this. This is like something I bought years ago. Look at that. Chart patterns. Look at that. Right here on my mouse pad, which I really don't even use. Right, we got flags, pendants, symmetrical triangles, descending scallop, 3 descending peaks, a measure move down, a descending triangle, a rising wedge, a inverse cup and handle. Right, you got the classic cup and handles, falling wedges, inverted head and shoulders. There's literally hundreds of patterns. What's my point? If I had to give you a cheat code, there's a ton of patterns. Eventually, over time, especially from me, you're going to get the statistics around volatility, like where we should buy, where the statistics like tell us the highest volatility always exists on the chart, above and below the 1, which I'll show you in a second. That matters way more than all of the different patterns and knowing the names, right? So what am I saying? That specific candle there, right there, though, a topping tail, bottom tail hammer, huge. Those are giving you a ton of information. It's showing you like a 1 day, a 1 month, whatever the time frame is. It's showing you a really strong reversal by having that really long wick. I pay attention to those. I see those 16 years in. I still love and see those candles. Those are probably, right, I kind of got away from all the different patterns because you'll just go crazy trying to recognize every pattern. Why does the pattern work? That's what nobody asks. Why does this pattern work? What's actually happening? Something's happening every time price takes off in terms of volatility, right? So I want to give you, hopefully by watching me, over the next year, couple years today, you'll start to think a little bit differently. Patterns are cool. They're cute. Technical analysis, everybody talks about, but where's the edge? Where is a legit statistical edge from trading? I'll show you one of my favorite indicators, as always. So let me hop over to the VIX. So the VIX is a volatility index. Volatility index. The real simple rule is a factor of 16, which means if the VIX is at 16, we have 1% volatility. 16 divided by 16. It's 1. So volatility is 1%. You should expect the S&P to move a little bit above, a little bit below, right around averaging 1%. All right. We get up to 32. 32 divided by 16 is 2, and so forth. So what you'll notice is if I actually change this to a week chart really, really quickly. Actually, no, let's do this. Let's change it to a month. Just to go back. When was the last time we got all, matter of fact, you guys can't perfectly see that. So let me zoom out a little bit more. When was the last time we got up to like 65 like we did this week? The last time that happened, you can look at it, March of 2020. So think back for a second. What was March of 2020? A great time to sell? Just for that 1 month, you had an amazing window to sell, sure, but it lasted a month. But the next few years were crazy, bullish, volatile on every chart you could look at, right? So it was a buying opportunity. The VIX signaled, hey, when people are afraid, when people start buying puts 30 days out on the VIX, buying puts 30 days out on the S&P, it's reflected here in the VIX. And I don't think people really understand the value of the VIX. Like, you literally can use the VIX to plot with precision every single trade you take on the S&P. It's literally the inverse. It's giving you such powerful information. So please study the VIX. Go beyond what, the things that I cover. I got some more content coming on the VIX because I got a couple fun, I think, things that I don't even know people know you can do on Thinkorswim with the VIX to look at it a little bit differently. So again, I just wanted to show you the last time we jumped up to 65. All right, and then let's do the math on that. We went as high as 65. So that's 65 divided by 16. That's basically 4% volatility. So we went from 1% to 4%. If I go back down to the day chart really quick, as you can see, that really big spike up was one day. One day. Shot right back down. Where are we now? Right around 24. So still over 1%, but we dropped. The volatility dropped. And it's still higher if you're trading right now. You can feel it. The moves are bigger, right? The S&P is moving more every day because there's more volatility, right? So hopefully you guys are starting to put those links together about how the VIX moves and how powerful it is. It's pretty amazing. Now, if I do this for 1 second, should I do this right now? Let me think. Well, let me go back to my list. Japan in a crash, VIX and SPY. Yeah, let's do this. I'll flip over. I'll go back and let's take a look at the S&P this week. Actually, I'll go to futures first. So S&P futures, your cheat code, middle of the night, somebody's telling you, hey, the market is dropping. Can you look at, matter of fact, let's do it. Let's go to SPY. Let me take everything off my chart. And I'll go to a 4 hour. So you can see those periods during the night. All right, so this is when that crash was happening. All right. Actually, it was right here. All right. This day right here. That was Europe selling off. And as you can see, we were already very classic without even, look at that. So we were down. We were right. Nice little correction. Correction is defined as when the market pulls back from as high as 10%. All right. So we were there. We were about 5-6% down on our way down. And then we hear about this thing from Japan that nobody knew was going to happen. Nobody predicted. Nobody forecast that I saw. Right. So we continue to go further down. But if you look here, what can you do? Well, again, I hop over to the ES, which is S&P futures. The chart looks exactly the same. Actually, you know what? I was thinking about SPX. There we go. That's what I meant to say earlier. When I said if you looked at it during the night, you looked at the S&P index during the night, it's like, why does this look different? And S&P futures are based on the S&P. I know it's weird. You don't have the same amount of data. You do have it on the SPY, which is the ETF. I can't explain why. I don't know. I never really tried to dig into why this one gives you the clarity. But what I do know is you can make some money trading the ES. Because again, I used to trade. There are people that wake up and trade, right, 2, 3, 4 in the morning. If you're a futures trader, that might be a part of your journey. That might be one of the only ways you can quote unquote day trade because you have a full-time job, right? So that's what I used to do. If I actually I'll do this. I'll look at this week without any Thursday, Wednesday, Tuesday, Monday. So the crash happened. I'll put a timeline here. All right. So that was the crash, Japan's crash. Continued all night. All right. And so where are we now? Have we gone anywhere? Are we bullish? Are we bearish? What are we doing? All right. I got to put some indicators on my chart. I covered this last week. You should watch last week's. One of my favorite indicators, of course, I think it's the perfect indicator because it directly connects to volatility. You'll hear me say this a million times. What is volatility? A statistical measure of price dispersion. How do you find or see price dispersion? You need a standard deviation. You need the calculation for standard deviations, which is like stats 101. You need stats 101 standard deviations to statistically measure price dispersion, or how price is dispersed across a chart, really going up and down, right? And the only tool that I know that I love that I've been using is Bollinger Bands, right? But what I told you guys was the secret is you got to use the 1, not the 2 standard deviation, not the 3. You got to use the 1. So here's what it looks like. Actually, let me take this off for a second. So I got 2 things on my chart now. At the top, where price is, you see the 1 standard deviation plus a negative band. I call it the 1. Keep it simple. If price is above the 1, strong volatility bullish. If we're below, strong volatility bearish, or at least trying. All right. But if I go here for just 2 seconds back to the SPX, and then I go, let's say maybe like the quarterly chart, you'll see a very clear pattern. We've been bullish on a quarterly chart above that top band for years, for over a decade, with what? A couple quick pops down to the 20. Regression, it's called regression to the mean. We just, right, price will come down and hit its average. Nothing stays high forever. Volatility doesn't stay high forever. Price is going to come down to its average and then decide, are we going to change direction or are we going back into the main trend direction? All right, so that wider view gives you just crystal clear clarity. It's crystal clear. So I'm going to go back to the ES. And I'm on the 4-hour chart. I know I'm jumping around time frames, but I do that intentionally because a lot of you guys just like only look at stuff on a day chart, which is weird. Why are you only looking at, oh, you can't see my chart. Why are you only looking at stuff on a day chart? Why are you only looking at stuff on a day? Okay, I got it. Thunder catch, thanks. Justin, chart not up, my bad. That's the one thing I got to work on. Sometimes I'll just go and I'll forget, right? So I'll go back really quick. So SPX quarterly chart. All right, see how like this period from, what is this? July 2012 until, what is this? COVID. That's 8 years. Every single candle, every quarter above the 1. It's telling you something about volatility and the strength of its volatility. That's really the only place I want to buy. I think it's the only place you should buy if you had a system that was designed to give you efficiency, precision. Because if we're down around the 20 or prices at the bottom band and trying to buy off the bottom, like people trying to buy the bottoms, it's tough. It's a recipe for, like, I think, disaster. Nobody can actually perfectly time exactly where we're going. So I would rather buy when volatility is strong and I won't have to sit in trades. It's literally, I'd say, simpler, more efficient to make money, right? It's when the volatility is really there. So you can see that on any chart if you have this 1 standard deviation. Again, perfect indicator. Why? Because that is the definition of volatility, a statistical measure of price dispersion. So you can't talk about volatility and not talk about standard deviations. It's just, you can't. You can try to, but you're really not talking about actual volatility or what is the definition, right? So quick little, right, quick thing there. Now let me go back. I'm gonna go back to this week. Now remember the ES, matter of fact, let me just show you real quick. So I'm on the ES, which is S&P futures, but if I change this to the SPY, the chart is virtually the same. All right, so if I'm on the ES and I'm talking about futures, the S&P futures, I'm still talking about what most people are buying and trading, which is SPY, the ETF. All right. I love the ES because I trade it. So as you can see, we were clearly in a downtrend even before the really bad night with Japan. Price was already bearish. All right, this is where you have a higher statistical chance of price going lower. And I wish he was on. I had a guy, shout out, he knows who he is. I won't say his name because I don't know if he's private or personal, a private person like that. But he wrote me this morning. He said he couldn't wait to take my next options class. And he said, after watching your last live, what I learned about Bollinger Bands and the perfect indicator, He said, in less than a minute, I instantly had a better understanding of why a lot of my trades were losing. Now, what does that mean? That means he's one of those people who may have, and I'll give you a quick example. He may have bought, let's just say he was could trade, right? 23, 5, whatever it is for futures. But he's that person who may have bought like right here, expecting price to go back up. For whatever reason, I don't know what indicators he uses. I don't know who's coached him, who's trained him, right? But when you're here buying, the statistics aren't with you. This is where all the downtrends speed up, gain strength. This is where like that bearish volatility kicks in. All right. So if you're buying here because you're trying to guess or like as a trader, you're probably going to lose your money every time. Probably. Right. And then what will happen is if, let's just say this for example, really quick. Let's say you bought like right here on this day. All right, let me zoom in. Let's say you bought here on this day. You're under the band, yes. The volatility hadn't sped up. We didn't have enough volatility just yet. What would have told you that is these little red dots down here on the TCM squeeze. That's a separate indicator. I'll talk about it a little bit today too. But what happens is people buy down here. It reverses the next morning. Sometimes we have like fakes on everything, right? So no indicator can tell you exactly what's going to happen. I'm talking about what is most probable to happen because every single uptrend is going to be above the bands that manifests and lasts for some amount of time to make people money. It's going to be above the one. It's not Noble telling you this. This is statistics. All right. It's just math. Right? I say all the time, trading ain't magic. It's math. What'll happen though is people will buy down here, think they're buying for the right reason. It'll shoot up. They feel like a genius. Oh, I know what I'm doing. I have the right strategy, but they still don't really like. You're not even really aware that you kind of lucked up. There's a lot of people making money off trades that are just luck because nothing works 100% of the time perfectly. But imagine if you got back to this same level and said, oh, let me buy down here again, not realizing that the squeeze now no longer had the red dot saying we now have the volatility to drop. All right. And we're under that bottom band. And what do you see? Red dots. I mean, each bar going lower, 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 lower. So that's why that gentleman said, hey, this was super powerful. Just the free stuff. I already got one little rule. If we're underneath the one, I really need to think very deeply about why I'm long. Because the statistics aren't necessarily with you, right? Even if we're at a 200, even if we're at some key level, some guru told you is support. I don't care who told you what. Pull this one up. Look and see where we are. It's only going to help you. All right, so let's get back to the rest of this week. So rest of this week, what happened? Here's what I love about my system. Price has to come back. I don't care how high we are, how low we are. We have to come back to the actual band first. It's like, it's always going to happen. It happens every day. It happens on everything. And it's not even, saying it's predictable isn't even the word. It's like, it's just the movement of the market on a deeper level. And I know this is weird, but roll with me for 1 second. Think about this for a second. A human being. Oh, Thundercats, I saw your question. Can you show Bollinger Band settings? Yeah, I'll show it to you real quick. Think about this. When a human being runs, we run like this, right? Every arm goes up, building that kinetic energy, right? This is how we run. This is like the movement of the human body. What's the movement of the market? Nobody runs like this, right? Nobody runs like that. That'd be weird. 1, 2, they wouldn't be running that fast. All right, that would be very weird. So nobody can do that. So in the same way that if this hand goes up, what's going to happen next? The other hand is going to come up. You know that. What I know about price is that I don't care how strong the uptrend is, the downtrend. At some point, when that pressure starts to fade, when that volatility starts to come out, people start taking trades off the table, shares off. They start to exit before that downtrend corrects, before it pulls back 5%, actually right about at a 5% pullback, is going to be that band that you were previously under. We're going to go back and touch it every single time. Every time. All right. So let me do this. Let me stay on that point for a second. So we were here. Notice how this bar right here, what do we do? Back to the band. All right. So being now inside the bands is telling me, okay, we're getting some momentum. Right? Again, the strongest downtrends are underneath that band. When we get back inside, it's kind of telling you that like that buying, that selling pressure is easing up. Statistically, it's easing up. Like all the reversals happen inside the bands. All right. And so let me do this real quick. For Thundercats. Oh. I keep doing it. I'm sorry, y'all. Dang. I just did all of that and I wasn't on the chart. So I'll do this. I'll leave it on my chart for now. I won't even come back to me. Y'all don't really need to see me. You really don't. I'll leave it up. So if I were to put Bollinger Bands on my chart, I'm using Thinkorswim, right? It's gonna pop it up. Right here where it says normal DEVDN. That's number of deviation down. Standard deviation down, bottom band. Number deviation up, top band. I'll just change this to -1 and 1. That's all. The deviation down, -1. The deviation up, +1. That's all you need to change. Click OK. All right. So again, before Japan, already in a downtrend, as it started to speed up and that sell-off was already happening, firmly in a very strong downtrend. All right. Where's the first place at some point? Matter of fact, if we're even here, right, let's pretend we were right here. This is 5 a.m. The 5th. Let's pretend we were here. Where does price have to go, Noble? Like, where are we going next? We always are trying to it's not a guessing game. It's just really understanding the data. At some point, we're going to go back and test the 1 before. We could go lower here, yes. But at some point, bulls are going to push us up. Bears are going to get out, take some cash off the table, right? We're going to push up. We're going to run to that 1 every time. We're going to run to the 1. If we can get back inside those bands, we're trying to get to the 20. That's the average. It's half court. It's like, oh, are we going to stay bearish or is this going to go back bullish? Right. And then what did we do? We tested that. We got really, really close. To me, that's enough. That's a test. All right, the very next 2 candles, now we are creeping back inside the bands, All right, tested the 20. When we test that 20, it's again, do we have enough bulls to get us higher? Or are we going to go right back down? It's always a question. Easy to forecast that. It's just math. All right. If you look at what actually happened, let me zoom out a little bit, and then I'll go to a day chart because it's fun to kind of show you the day chart view too. This is 4-hour view. What you'll see is we pushed up to the 20. Yeah. And then we came right back down. Pushed up to the 20, came right back down. It's like having the ball, basketball metaphors. I got to do something to make this a little bit more applicable. It's like you just took a shot. All right, the other team got the ball. Oh, they took the ball all the way to half court. But you stole it at half court, and now you're pulling it back your direction, which is down. Because if I'm a bear, I want to go back down where that great bearish volatility is, where everybody's going to panic sell. I want it to go lower as a bear. All right. Through the night, and this is where the market's tricky. As y'all know, there's what happens right after hours when we can't trade that affects the market. So slowly the next night we push back up to the high of that bar. Really didn't go any. Well, let me use a different line. And I want to put a circle here too for a reason. All right, so we got back up to this 53.50 area, dropped again, pushed back down. And I know here a lot of people yesterday were like, oh my goodness, I know we're about to drop back down to the bottom to test that low. The tricky part about that is you don't know what's going to happen overnight. I almost feel like that's not fair. Markets shouldn't move. But again, there's another market actually happening alive and moving and selling at night. So it's like It's not that the market loves to. It's not that the market makers and people who created the markets don't care about us having any potential chance to like make moves at night. It's nobody's gonna trade 24/7, and then we have other global markets that literally are different times. All right, so peaked under that bottom, just rode it all night, did not go anywhere, just sat there, just bounced at 7. What was this? 5 p.m., 9 p.m. Right, just bounced. And then today we pushed up. Yeah, we had some. What did we have? We had a report today. 8:30. This is today. 30-minute chart on the ES. What do you see? We were up bullish today, all day. Matter of fact, let's do this before the market even opened. Right here, the first 30-minute bar at 9 o'clock. Before the market opened, were we bullish or bearish? Are we above the 1 or below? It takes 2 seconds. I could teach a 5th grader how to get the direction right probably about 90% of the time. Now, the question is do we have volatility? What stock is this? Like, right, there's other questions that matter, but I'm just talking about the technical part, the statistical lens. We're above the 1. We're getting strong volatility. Even though it's only 9 o'clock. What happened at 9 o'clock? 9:30. The market opens. What did we do? Pulled back, got really close to that 1, higher the rest of the day. Just up. That's it. One little pullback right here. What did it test? What did it touch? The 1. And bounced and went back higher. That's really what's happening, probably more than people know. And I've learned a ton of different strategies like you guys, supply and demand and Elliott wave, support and resistance, moving averages, and just about every indicator you can name, right? I really do. I really love giving you something that I know a lot of people are not aware of how powerful it is. And this is like one little piece, right? This is one little piece of really, a more complete body of knowledge that I collectively, I put it all together. I call it the Noble Woods method, right? It's what I teach in my classes, right? But I'm here now. Took a long time to get to YouTube, but I want to share it with the world. So let me see what time it's 8:43. Okay. Let me do this. Let me go to the day really quick to just prove another point. Where did we go? Take everything off the chart. No, actually, I'll leave this stuff up. So this was right. This was our line in the sand. Right. What did we test in ranging inside of this really ugly hammer? Actually, it would be beautiful if it was if it closed bullishly. Let me turn my charts for a second. I'm gonna take everything. Just go back to like the red and green you guys are probably used to. Right, so if this was a green candle, it would really be great. I would love it. It's at the bottom, yes. It's still reversal-ish based on like the theory of like what this candle is actually saying. It's under right that -1 band always. Well, at least where we were because we were down. We were already bearish, but wasn't the perfect candle. But what and I'm telling y'all, after like years of doing this. So much that some people like me know is just instinct. Before we can go higher, what do we have to get higher than? It's real simple. Like, think about it for a second. Almost throw the charts away. If we had a really bad day where there was nothing but selling from the beginning of that day to the end of that day, a lot of buying happened at the end, reversal-ish, right, which creates these hammers. That's what it is. It was an immense day of selling. Big red candle, and then slowly a lot of buying happens to literally push us back up. We retrace at least 50% of that single day. For us to really be out of the clear in a very simple linear kind of like thought process, like where do we need to get back above to get all of those people who may have been bearish that day out? If we can get back above that day. So notice what we tested all this week. All right. Top of that bar right here. Touched it here. All right. But forget that for a second. If I go back and put my system on, and I got to take this one thing on because I just want to I keep taking that one indicator off because I don't want to give you guys too much, right? Because I'm not trying to like teach you a full system in these videos. It's impossible. It's too much content, too much thought, philosophy, right? And I test you a lot in my classes, right? So I'm not trying to give you everything because I really would do a terrible job of trying to give you everything. But here is what I want you to notice, and I'm gonna take everything off for a second. Underneath the band, where did we go? Tested the bottom band like clockwork. So it happened to be right there a little bit above that high. So if you had more of a, let's say you had like a really good grounding and just like basic kind of pricing, we can't go higher until we close higher than the candle we're ranging in, right? That's not even like, you don't even, again, middle school kids can tell you that. We can't go higher than this bar, right? Ranging inside of it all week. To go higher, we actually have to get above that bar. That's easy. The deeper piece is that we ran back to that band, right? And as of yesterday, we closed just a pinch, barely, but right there, like slowly back inside. If we go higher, where are we going? To the 20. Just run into the 20. Do it all the time on everything, right? So there's like, I got a lot of friends. I had some bananas. It was me trying to catch a fruit fly. I had some bananas and it was like, you know how summer is, man. Doggone fruit flies are like, they're like little devils. They're so hard to get rid of. I got friends who have a lot of different key levels all over their charts. Charts look like, I hate to say, look like Spider-Man's kind of just going crazy because there's just lines everywhere. I'm like, bro, like I have no idea what you're looking at, right? For me, in a very simple, very, very, very simple, but still grounded in statistics. I expect price to interact with this bottom band if we're under it. Has to go higher than that to then do what? Get to the 20 half court. Would you shoot a shot at half court? Is that a high probability shot shooting at half court? Hell no. No, it's not. Nah, you don't want to shoot at half court. You want to shoot at half court if you like glory. If you want to like, right, just for people to go crazy because you shot it. It's not a high probability shot. All right, we get to that top band. Then now we're at the free throw line. Right now we're getting somewhere. Right, probability, chance of getting the type of volatility that we need as bulls that makes markets just go higher, 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 in a very smooth way. Right. Okay. So hopefully that was helpful. I know I didn't talk about the squeeze a lot. You can piece it together though. Honestly, I take that back now. You do need training to really get the squeeze, because here's the crazy part. Even this indicator on the bottom, the squeeze is actually based on Bollinger Bands and Keltner channels, right? So the squeeze itself is a little stats. I got that one band on my top chart. I'm good to go. I can trade anything in the world right here with these settings. I don't need moving averages to cross. I don't need Fibonacci. I don't have to draw support and demand, supply and resistance. Like all that stuff is too basic. It's not giving you statistical information. It's not. Okay, but I'm going to beat that horse to death because I love talking about what I know a lot of people aren't using. So let's do this. Let me see. Let me go back and see what else did I have on here. So we talked about the VIX a little bit. It's lower now. We were up at 65, 4% volatility. We're down to like 1. Okay, cool. Does that mean all the volatility is gone? Does that mean something can't happen to send us back to those lows? No, something can happen. We just don't know what it is. But nobody knows what's going to happen. So is it possible? Of course it's possible. Yes. Yes, and we got some reports next week. So matter of fact, let me go here for a second. And let me see if I can do this for you guys real quick. I want to actually show you, before I touch your stock charts, I just real quick want to show you the website that I use for economic reports. Reports are important. They are important. Let me see if this will pull it up the right way. Yeah, okay, cool. All right, so this website is called Baby Pips. I know that's weird. So what the heck, Baby Pips? Pips foreign exchange. Yeah. So I used to trade forex when I was learning how to trade futures. I was like, I might as well learn how to trade everything. So I fell in love with futures. A lot of people now like leaving forex to trade futures. I kind of figured that out. The differences between the two, literally back in like 2010. Right. So I used to trade forex, but I just fell in love with futures. Right. And I knew if I could really master futures, or I could have a pretty amazing financial life and really travel and be free and all the things that we want from this that aren't just about the money, right? So, real quick, economic calendar, lock it in, put it in your bookmarks, right? It's really great. Go to filters. I'm gonna show y'all exactly what I do. I just go to filters. I click none, so it'll uncheck all of the different currency pairs. I just click USD. So I just care about what's impacting the United States, at least when I'm just basic day trading futures, and then you can go to impact, right? And so I'll usually take the low off. So things that have low impact really aren't going to affect the market. I don't really care. So I leave medium and high checked. Let's see. Somebody said a Forex Factory. Yeah, there's probably a trillion of these, right? This is just the one for me that's nice and clean, right? So I'm not saying this is better than anything else at all. Actually, they all should be telling you the same thing, right? Consistently. The sessions, you got Sydney, Tokyo, London, New York. As I was talking about earlier, we live in a global market. It's not just New York. Sydney opens, Tokyo opens, London opens at 3 a.m, right? So global market, we were getting that overlap, which is why you can trade futures like 23 hours out of the day, because you're really trading another market session, right there, time. So that's all I click on. And then what I'll do is I'll go to next week. All right, pulls up next week. So what we got next week? Monday, August 12th, we got something happening at 14. It's military time, so 14 subtract the 12, so 2 o'clock. There's a monthly budget statement. If you want to know what it is and what it means, Department of Treasury, blah, 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 the forecast, all right, gives you all that. Tuesday, a lot happening Tuesday, but most of it's in the morning, 8:30, 8:30, 8:30, 8:30, right? We got some PPI, we got core PPI, we got year over year, month over month, right? What is this? 1 o'clock, one of the Fed chairs, I guess, Bostic is having a speech. And then this one is later in the day, right? Wednesday, look at Wednesday. Again, 8:30, 8:30, 8:30, before the market opens. So we could be bullish. Tuesday, we could be bullish. These reports hit, drop us before the open on Wednesday. And you wake up like, wait a minute, wasn't I in profit on Tuesday? Yeah, but you didn't know those reports were coming. And you should have known if you're day trading, swing trading, right? You should know that. Wednesday, Thursday, again, a lot of reports early in the morning. Got some stuff at 10. Housing market index, business inventories. Fed Harker is giving a speech. And then on Friday, look at that, Friday at 10 o'clock, University of Michigan consumer sentiment. How are consumers feeling about the market, about inflation, about the economy? Are they buying? Like, what does the data show? That's a report that has a high chance of moving the market. So if you're in the market at 10 o'clock on Friday and it just starts to take off or maybe tank, depending on which direction, either way, you need to know what reports are coming out. That's a part of this. It really is. So I want you guys to make sure you stay up on your reports. Make sure you check them. And all you got to do is check it every Sunday. Just pull it up, check it every Sunday. Make some mental notes, right? Some weeks we don't really have a lot. Some weeks it's like, oh, you might not even want to trade some weeks because we have so many reports, right? So hopefully that helped. Okay. Time frame selection. So I was I met with one of my I always want to say one of my favorite students. Hey, look, I'm real. I do have favorite students. And it's not because I like them better than anybody else. It's just because I have more connection. I know them better. Of course, I like you better if I know you better, right? So some students really we become friends. The mentorship continues after class. I invite people to do that. Like, write me, talk to me. But if you don't, I can't force it, right? So, but I open myself up to my students. She was in town with her husband today. We met up, had a great conversation. Had lunch downtown. It was real cool here in Atlanta. And I was like, "What do you think I should do tonight? I'll be live." She was like, "No, but you need to talk about time frame selection." people don't they really don't understand, and most don't have a system like yours. That's a piece of it. But people really probably don't trade. A lot of us aren't trading. A lot of you guys aren't trading on the right time frame. So I'll do this. I think if I started to go into it now, I might spend more time than I want to, because I wouldn't want to do it a disservice by trying to hit that for like 5 minutes. It's worth letting that be. So what I'll do is I'll talk about that next Monday. So now you got something to look forward to. I'll talk about time frames. Why did I flip to the 4 hour, the 30 minute, the 5? What's the best time to day trade? What's the best time frame to swing trade? It depends on you. It's personal to your lifestyle, right? Nobody's really, I don't think I've ever heard any guru say that other than me. The time frame you select should match your lifestyle. What does that mean, Noble? We'll talk about it on Monday. I promise you we'll talk about it on Monday. So let's do this now. Let's do what I promised. Let's go to the live charts. Actually, let me pull up and make sure I even know which stocks I'm supposed to be looking at. Let me go here. Let me pull this up. Okay. So this is right. This is the post I made in my group, right? And let me close it for 2 seconds just to show you the big gold bars. Me and my cousin Joe started this group. As you can see, 29.9K, so 30,000 members in it. Of course, that many people aren't active, but amazing group of people. Mostly black, mostly African American, whichever suits your fancy. Investors, traders, newbies, novices, people who are trading, aren't trading, learning, have learned. A couple of probably every month scammy people that I'm trying to kick out and the technology is trying to kick out. Because y'all know this is a dirty space, right? People post receipts and try to claim they can teach and be, come up with all these cute names for what they can do. People just popped up out of nowhere out of COVID. You gotta be more skeptical about who you trust, right? What I love about this room is you can go back and see me and Joel talking about trading 10, 12 years ago. This ain't new to us. We didn't just start because of COVID. All right. So anyway, so join the room. As you can see on this post, and I'm actually going to pull it up. It was this one. And I said, yo, give me your 2 stocks. So I'm going to pull this up. So Shelly asked about Crowd. Misha asked about Lily. This is ADVA, Adva. I don't know. Y'all know some names. I'm just don't take it personal, right? CVS. Cherokee wants me to look at Ford. So I'll do that. What I'll start doing now is I'm gonna put this on a different screen so you guys don't have to worry about seeing it. And then what I'll do is I'll analyze each one for you. I see you've mastered YouTube Live. Yeah. You know what? Yeah, Monday was tough. You know what it is? Let me say this real quick. Thanks for pointing that out. Monday, man. Monday, I want to take that video down. I was just like, oh, this is terrible. Things have to be executed the right way for me. Like, I care about the quality of what I do. I really do. And so, yeah, I just, this one's a lot better because I'm just using the right technology that I already knew to use, but I hadn't done this in so long. I literally forgot the best way to do it. It's just one specific thing I didn't do. So Monday's video is great teaching, but a lot of flipping back and forth. You can see my screen, all kind of stuff. So whatever. It's cool. I'll leave it up for just, I look back 10 years and be like, man, that was crazy. Okay. So let me grab my first stock. I'm going to go to Crowd, Lily, and CVS. Crowd, Lily, CVS. Crowd, Lily, CVS. So on Crowd. And actually, I'll do this real quick. To give you perspective, as an investor and a trader, yeah, I can do both. Using the same system, same statistics, right? This Noble Woods method. I'm using the same indicators. I want to always understand volatility and where's the average. Like, that's so critical to me. I know a lot of you guys are probably like, man, why is Zoo always talking about the average? All right. Imagine playing basketball and you don't know where half court is. That's just, you playing full court, but somehow there's no, you don't really know exactly where half court is. You get excited when you cross half court and you're going to your side of the basket. Why? Because the closer you get to the basket, there's a higher chance of hitting the shot if you just had to throw it up. It's a higher chance of you hitting a free throw you just had to throw up versus a shot from a half court. All right, so it's very similar to price. Very similar. It's just we flip it, right? Flip it. We're going up and down now because prices go up and down. So what I'll do is I'm doing these. I'm actually going to start off. I'll start off on a quarterly chart. Why the quarterly chart? Because I want you to think like a long-term investor and get off of the day chart. That's not the only time frame that matters. I want you to look at it as if we're looking at the last 4, 5, 7, right? Years. Every quarter we have earnings. Right. So I'm looking at the longer time frames because they're giving me a broader picture of information. Yes, higher level, but the same math works. So we above the 1 on a quarterly. Yes, I would expect that stock to be up for several quarters. So that's years. How do you predict if something's going to be up 2 years from now? You can't do that with a day chart. You can't do that with a day chart. You can't do it with a month. All right. Got to go to longer time frames and use the right math that actually helps you to measure. Right. Because it's not really even about price being up. It's really about, will we continue to get the type of volatility that creates those high prices? Y'all get what I'm saying? Right? It's not just price. It's something underneath price, manufacturing, making it, which is volatility. At least that's my recipe. That's mine, right? That's my view. Okay. So, CrowdStrike, as you can see, looks like we IPO back here. And what was this? I can't even see. Oh, my bad. Y'all can't see the chart, but I caught it. So, what is this? Back in April, I can't see that. April of 2019. Okay, April. All right. No downtrend, pushing the higher highs, coming back down. The colors, I didn't say this, but I know my colors, or matter of fact, let's go to like a 5-minute chart just to show you like for 2 seconds. So my colors are a little all over the place. I know you're probably like, what the heck is all of this blue and green? It's something else that I use called a TTM trend. Now here's what's crazy. I use a TTM squeeze, trade the market squeeze. I use a trade the market trend, which is what colors my charts. And then I'm using Bollinger Bands. And all 3 of those indicators are all using the same type of math. And they all care about that average, that 50% mark. Right? So the indicators work together. I can't tell y'all how many times I've been in a consult with somebody who, oh my goodness. They have 3, 4, 5 different indicators. The math is not aligned. They don't even know what kind of math it's actually using. You got to go deeper. Right? So, okay. So as you can see, these last 2 quarters, we were above. Where did we run to? We came right down to what? We actually tested and pushed through that top band. But pretty much just came on right on down to the average, down to the 20. Every time we go through that top band, if we're coming down from an uptrend, where are we going? To the 20. Every time. All right, every time. So quarterly for me, if this quarter closes like this, it's now inside the band. So whoever's looking at crowd, it's still bullish. We're still above the 20. Real basic. Above the 20 bullish, below bearish. But where the high volatility of those happens, strong volatility, above the 1, below the 1, right? So we're now back inside. Whenever we get back inside, it's like, oh, this is where all of the reversals that turn into eventually downtrends, this is where they start. As a matter of fact, let me just show. Let me hop over to PayPal real quick for 2 seconds, because I had a consult with somebody last year. I'll never forget this story because it blew me away. She was in some trading group with somebody's, I don't know, some dudes who just kind of, according to her, who just really kind of, start doing that thing a little bit after COVID, which is fine. It doesn't mean you weren't trading, but right, I would be careful. And she'd end up losing 6 figures, put up a lot of money on some leaps, longer term, right? Long-term equity anticipation securities, right? So just buying options contracts a year or 2 out. Again, how do you buy a year or 2 out? How do you forecast a year or 2 out? When they told her to place this trade, y'all, the exact same place we are on crowd. It was this bar right here that was inside the band. And where did we go? Right to the 20 and then right to the bottom band. All right. So she lost 6 figures. And honestly, it was it was literally with a system like mine. If you just understood these bands, it was so easy to be like, we are now back in that place where the volatility is not as strong. Maybe this isn't a great trade. Maybe this ain't a great trade. All right. And we just dropped. It was done deal. Didn't matter how much time she had. She could have had these contracts. They could have been 30-year contracts. It doesn't even matter. Once the statistics are like against you, you're just praying for a miracle, right? So I'm gonna go back to crowd. It looks exactly the same, right? You see what I mean? Like right there, closing back inside the bands. Same thing here, back inside the bands. If we were to close quarterly there, right, it's still bullish, but it's definitely not strong, right? It's not that strong volatility that makes trading a lot simpler because you can trust that your trades probably are just going to work out as long as you stay long. All right, don't try to get all fancy catching short pullbacks, right, to places you know that we may go to. All right, so that's the quarterly view. I'll jump to the week for a second. So check this out. Where did we come back to? Cross-referencing. Everybody should know about the 200. And I'm going to talk about the same indicators over and over, right? So if you're new, because this is like, I don't do my show often. I'm trying to get more consistent edit. You'll hear me talk about the same stuff over and over. I got a recipe. I won't be like introducing new technical like trade. You won't a year from now, my charts will look exactly the same. 5 years from now, they'll look exactly the same. 10 years from now, they're going to look exactly the same. Because this one specific indicator, Bollinger Band, has been on my chart literally 16 years. Forever. Right? So where we actually were going, and think about this for a second, on that longer quarterly chart, I know we're pressing down, right? If you taking some things from me, I know Noble said yes, the way the data works, regression to the mean, we could drop back to the average very easily. It happens, it's cyclical, it's normal. Don't panic. Where were we actually going to get more detail? Now you go to the week chart. Oh, this is the weekly 200. Oh, we were testing the 200 on the week. So when this big ugly candle happened 3 weeks ago, that's a monster candle. We went from top band strong volatility to very quickly underneath the bottom band right there. Like something major is happening wrong with CrowdStrike. Something's happening. That kind of candle, we either going to get above or we're going lower. And if we're going to go lower and you just had it on your chart, where are we going? We're going to the 200. That's predictable. That would have been a reasonable guess. Like, let's for a second, without even indicators and like getting too smart. That was just a good guess if you just guessed. But if we have more grounding, you know what actually blah, 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 right then. Yeah, it's like, okay, that makes sense. So we're here now. We're testing the 200, which is also, again, on that quarterly. So quarterly, right, if somebody was like, should I buy leaps on CrowdStrike right now? Nope. Nah, wouldn't do that just yet. It's not where I want it to be. I don't know. We might go lower. Might break the 20 and go lower. All right. The squeeze bottom, got those little red bars. Starting to get some bearish volatility, and we're under the 1. Right. So hopefully, if you're bullish, which you probably are, hopefully we're gonna bounce and go back up here. But it's gonna take some weeks to get back up. And where are we going even right now? You should already know just from what I taught you. Where are we going? If we do start to push up, we continue to get more buyers. Still will be bearish, but in this short-term push up, where are we going? 275. Going to 275? Because we always go to 275. Because that's where that bottom band is, right? Or we'll get close to it if we do push up. Okay. So I tend to like spend the most amount of time on the first stock, and that's so like you can warm up to my, style, my flow, and then I'll just kind of speed up. 'Cause I got a lot of stocks. Like y'all gave me a lot to look at. Y'all gave me a lot to look at. Let's look at Lily. Let's look at Lily. And I'll do something a little different with Eli Lilly. I actually go to the week chart for a second. So check out Lily. Had that reversal-ish bar back inside. Ran down to the 20, gap down, and open down here at the bottom band. That's a little tricky. Like, we closed near the 20, half court, but just gap down. Earnings. So let me show you earnings on the 4 hour. So this morning, I should pull it up. All of my students really are my favorites, but I just don't get a chance to talk to everybody. Right. So another one of my favorite students wrote me this morning, and she said, how long do you think I should hold my Lily trade? I was like, first of all, because she always is trading earnings and is killing it. She had a trade. I think this was her second trade after my class. It was on Eli Lilly. She put up 11,000. She made 48,000. It was her second trade after my class. Class was only like what, 4,000 or 5,000 at the time. All right, so the return, right? If you take this serious, the return for any class should be there. I'm not trying. I ain't even about me. But when you really learn how this works, right? And so she was really confident, a little bit older, a little more seasoned. You know what I mean? She came really ready to play, right? She ain't putting like $1,000 on trades. It's 5 figures every time, right? And so she hit me this morning and she was like, "Yo, good morning. What do you think? Where do you think I should get out?" And I was like, "Oh, is this Lily again? You and Lily? Why you didn't tell me this time? Why you didn't tell? Why I'm never trading Lily. I can't trade everything, right?" I don't want to trade everything, but this one, because I know, right, and it's Eli Lilly, right? I'm just like, why the heck wasn't I in this? So, long story short, she had an 805 strike. I'll put a line where the 805 strike is. 805 is right there. There's one little fun tool that actually no, what did I do? I went here to the week chart. And I was like, we just touched the top band on the week chart. For now, you should be more than happy at 880. Just get out. Like, that's enough, right? Because the only reason we popped up that hard to even get there was earnings. So if we don't get like a very instant continuation, if this market reacts more like the S&P and we're kind of still in this, right, we might go back down. We're worried about news. We got a lot of news coming next week, blah, blah, blah. Then, yeah, it's going to pull back easily to the 20. You're going to lose. Like, you're not going to lose, but you're losing money that you could just take, right? That's a beautiful trade. So she was like, yeah. And this was right before the open, right? And so she was like, yeah, I got out at 880. Thanks. I don't even know how much she made or the percentage. She told me she was going to tell me later. But we didn't talk. So if I go now to a day just to show you a little bit more. All right, so we were down here, gapped up above the 20, right, back inside, right, inside the bands now. Still not bullish, definitely not strong bullish, but no longer strong bearish either. Trying to figure it out. There are times where you just got to let the market figure it out. There's not a trade every time you look at the chart and you want to take a trade. There's not a trade available every time. Not statistically. If you want that statistical edge, there's not a trade at all times on everything. Got to be patient. But then you got to know exactly what you're looking for. Right? Okay. So that was Lily. Sheesh, I got to speed up. Wait, what time is it? 9:15? I got to speed up. Okay. CVS and forward. Let me look at CVS and forward. CVS. And I'll do the same thing. I'll go back to a quarterly chart. Oh, matter of fact, let me show you Lily real quick on a quarterly just because. Look at Lily. Look at Lily. Look at this. This right here, y'all, this is the most beautiful thing. Next to, like, for me, a beautiful woman, this is like the second most beautiful thing I can see. There's nothing. This is statistical price action. This is glorious. Every single quarter above the band. And as you can see with the squeeze on the bottom, every quarter the volatility slowly building. That's how amazing of a company Eli Lilly is. Even right here. Oh, that was 123. Oh, I'm tripping. Where's COVID? Oh, yeah. Look at this. Where's COVID? Is that COVID? No, 2020. Oh, right here. Look at this. Right here. Even during COVID, even COVID didn't push it back inside the bands where it was remotely. You should have been remotely worried about the trend potentially changing. Lily's just it's amazingly strong. And there's a couple reasons people don't trade it. Love to trade it. I won't even go into those, but look at it. Take a look at it. Think about it for long-term investing too, because look at the chart. That's beautiful. What was I supposed to look at? CVS. Let me take everything off my chart. CVS is all over the place. Ooh. Oh, a quarterly chart? Okay, so check this out. Quarterly chart. What is this? Back here from what? 2012 to 2016. Amazing run there. Got back inside the bands where all the craziness happens. Tried to do a downtrend. Really didn't have enough to really drop. So this really isn't a strong downtrend. It's under the one. But sometimes you'll get this where we just kind of keep poking the low. We just we won't run. We won't really just right. Reversed again. Crosses from bottom band to top. Had a few quarters right above. Right. Went back to old highs, 110, right back up to 110. Now we're right back inside. Actually, we're lower again now. So we did that full move from top band to bottom. All right, strong volatility, weak bullish volatility. At the average, nobody knows. Weak bulls for sure. Bears starting to get strong. Bears getting stronger. Like that's like the cascade, right? So yeah, this isn't looking good because if we break the low of this last quarter, we should go lower. Notice how I said we should. We probably will. All right, probably should. I'm talking like a statistician because I'm literally looking at volatility by looking at that standard deviation. If I go up here, let's jump to let me go to the week real quick. I'll go to the week. So you already knew what it looked like, right? You already knew we had this big cross. Week chart, we're underneath our 200. We pushed up to test it there, tried to test it there again. When we're under the 200, y'all, that's just another sign that we're in like bearish territory and also strong bearish territory when we push up to test the 200 and drop again. Some really bad weeks back there. It's just been ranging inside this bar. I don't know what happened. Was that earnings? I don't know. You got to figure out what happened 429. Because this bar right here is the one that started it off. We just been inside that bar for what is that? Since April. So that's a pretty long time. All right, I see ranges like this. I run from these. I want to trade something else that's moving. We're not going to really go anywhere until we get out of that bar. We might push up and hit the top. And then check this out. Where's the top? Look at where the top is. At the top band. All right. You already know if we go lower, we're already on a week chart. The weekly is bearish. So, yeah, if OCVS doesn't do something, then yeah, we're gonna go lower. We shall go lower. Oh, that's what that is. Okay. I just figured out something. Okay. There we go. I just figured out how to be a little smoother. I'm still getting used to streaming. My little, I got the Stream Deck. I'll be a master in like a month, but I got to do a lot of these first. So, CVS I was looking at. We'll go to Ford. Ford and Lucid next. I'll go to Ford and then Lucid next. Okay, Ford. I want to start back at a quarterly. Okay, so I don't know who I talked to, but at some point I must have taught on Ford. As you can see, right? April again. And what was the last one I looked at? CVS. For some reason, CVS and Ford stuck in that April bar, very bearish week or quarter during April. Oh, that was a weekly bar. That was a weekly. But either way, something happened in April, right? So April gave us some sort of parameter. Something happened that was like, has investors a little shook for CVS and Ford. It's really not going anywhere. It was above the 20. So like bullish, but not trending bullish, which is why it didn't trend, right? And now we're this first quarter, as of right now, we're underneath. If we continue to go lower, we're going down to 8.15. Just say $8. If I look at it on the week chart is already pressing down. Squeezes red bars. If we go lower, we have the type of volatility to go lower. So be careful. And when I say be careful, what I mean is, if you're like a long-term investor, because I don't know, all the time when people ask me, it's like, are you looking at this as an investor or a trader? If I'm looking at this as an investor, this is one of those, to me, that's just not advantageous, because I know I'm going to have to wait to make some money. Because right now in this moment, we're not experiencing right now, presently, the type of volatility that gets prices going higher. Right. So if you're long-term investing, it's like, okay, well, you believe in the company, read the annual reports, and want to leave shares for your kids and blah, blah. You're going to dollar cost average. You're going to buy every year. You know something about the company. You could talk about, business segments, what the company's doing. Like, you actually know. You know about their competitors. You know about their strategy. You actually are an investor. It's like you work for the company. Okay, cool. But you're going to have to wait. Because right now we're probably going lower. That's forward. Oh. Meant to change that. Okay, I see what I got to do. I got to go the other way. Okay. I'm just flipping some stuff around real quick, y'all. Here we go. Okay. Let me check something real quick. PayPal, Lucid. We look at Lucid. Let's look at Lucid. What is I forget that ticker symbol. I got to type the whole thing in. LCID, that's right. Okay, so I don't even know if I really have to say a lot on Lucid. This is a quarterly chart. So this alone, for me, is pretty disturbing. That's pretty disturbing. That's not what you want to see. It's not what you want to see. If I go to the weekly chart, you still can see this incredibly long downtrend. All right. Touch the top, man. Lower. Oh, pushed up to hit the 20. Lower. Just ranging. Got some volatility this week. Let me see. Did they have earnings or something? No, it doesn't look like it. So yeah, if I go back to the week, really strong move up, came right back down. Right back from above strong volatility back to the 1. Could not sustain, peaked back inside. Now we're back at the 20. All right. So hopefully you guys are starting to see, like, my my blueprint, my recipe for how to look at this. You're seeing these same statistical patterns because, right, statistics is like my chosen form of analysis. And think about that for a second. If I gave you, I don't know, you working for my company, right? I give you all of my sales data, blah, 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 right, for all that I've been doing education-wise since 2014. And I just said analyze it. What type of math are you going to use to analyze it? All right. That's what trading is. It's data analysis. I know we see all these patterns and all, blah, 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 but it's data. We're looking at data, right? So yeah, I know it's super low, right? I know it's like it's $3, Noble. It's $3. What if? I know. Those what if scenarios, I understand. 3 to 30 is right. I get it. That's huge. I understand. But right now, the probability of that happening is very low. We can barely get to $4, let alone 30. Right. So be careful with Lucid. Let's see. I'm going through everybody's stock, but I'm not doing both. I asked y'all for two, but it's really because I just want to kind of have some wiggle room to maybe talk about the one that may be more beneficial to kind of talk through because it's giving us something everybody can learn from. All right, this is about learning, learning and making money. Don't get me wrong. As you know, um, the folks who pay for my premium classes are not just trying to learn more and better and more efficiently than every other guru person out. No, they actually want to make money but have such a powerful system that they know what they're doing and why. Right. Um, Lucid, Tesla. Everybody wants to talk about look at Tesla. I look at Tesla, Mara, and then Intel. Tesla, Mara, Tesla. Now, Tesla. I'm gonna go to the quarterly real quick. Because everybody loved Tesla up until here. It was the darling of Wall Street. It was old Kathy Wood was talking about it all the time. Everybody who bought Tesla when it made that run, this amazing historic run, it was the best stock on the planet. And then we crept back inside the bands. That should have been a signal. Oh, that should have been a signal. What did we do? One quarter where we tried to push up, drop right to the 20. I'm literally saying the same stuff over and over at this point. Like that's how accurate statistics is as a mode of analysis, right? It's not about me. Right? I didn't invent statistics. I just love that I can see this clearly. And I literally am showing you guys the same thing over and over, right? So we dropped down to the 20. Volatility's teetering off. We ranged inside of this bar. Oh my goodness, we still inside this bar. Tried to get higher. We got to close above that band for it to really matter. We tested it right back to the 20, just right back inside this range, right? So quarterly, as you can see, Tesla's not out of its troubles. Elon Musk better do something. He over here trying to do a lot. Focus back here. This is what we know you for. Focus back here. I know he has all these other projects. Twitter, come on, man. Get back to Tesla. All right. This shouldn't be happening with Tesla. All right. The volatility, as you can see, I drew that line. I wanted to show you the volatility trend. So and think about it. It makes sense. When nobody's buying, you slowly have like bullish volatility is teetering off. Eventually, these candles on the bottom on the squeeze are going to turn red. Those bars are going to turn red. That's negative or bearish volatility. Like Tesla's not out of the woods yet. I know it used to be the stock everybody loved, but it's having some issues. If I go to the week, pushed up again. Looks like we crossed underneath. Nice little downtrend there, right? Lower, back up to the 8, lower, up to the 8. One, lower, finally got back above. It got really tight range, exploded out. But then, of course, tested that 200, could not sustain it right back down. That's not good. You never want, you just, as a bull long-term investor, when we're under the 20, bouncing up to test the weekly 200, 200, not 20. That's tough. That's tough. So it's right there in the middle. We could go back up. Yes, we could. But if we go up, you know where we're going to. We got to get through that band. We got to get through 220 just to get to 233. All right. Just to get back there where those trends really gain, right, momentum. So that's Tesla. Kind of stuck. Mara, Intel. Let me see. Mara. Now, I know some of you guys are probably like, no, why aren't you talking about the companies, the fundamentals? Like, I want to hear because there's a lot of like shows like this out there. You know, honestly, to be very honest, I just didn't have time to do my normal. What I used to do is I would ask for these the day before. That'll give me just a little bit of window to just research, talk about the products, things going on, news happening with the company that'll connect to this. But even if I had no idea and never watched any news on a stock, I still could trade it. I'm not saying throw fundamentals away. I'm just saying I'm comfortable enough to trust the math that's here and the stats. All right, that's what I'm saying. Of course, the fundamental matters. Of course, you need to know something fundamentally about the company. Yeah, are they profitable? All right, you need to know some ratios. Of course, you need to know some things. But okay, this is Mara. This is one of those that'll go when it goes. On the quarterly, as you can see, just again, these should stand out to you like crazy. Right here, still stuck in this bar from April of 2022. That quarter. I don't know what happened fundamentally there, but we have not recovered from it. All right. So that's part of a view, high level view, quarterly chart. Drop down to the week. We were under, couldn't get above the 200, right? And then we started to, but I don't like whenever you see these type of really strong pops, right back down, pop, right back down, that's just a sign that either the industry, the type of company, something about it right now, it can't just give you like one of those trends you can relax in. You have to be a better trader to make money on this than you do on Eli Lilly, on Apple, even on Tesla. Like you literally kind of have to have more skills. Look at the chart. I could trade it. I can. But I wouldn't even put myself through this. Not really. All right. So, and I'm not trying to get y'all to like not trade certain things, but I do want to give you perspective. Like this is all over the place. Looks like we had popped up to 27, cross back over. We're now back underneath the weekly 200 again. Yeah. Mars a little bit all over the place. Just a little bit. But again, stuck in that range. Stuck in that really long. What is this? 1, 2, 3, 4. It's 2.5 years. We've been stuck for 2.5 years. Got back up to 30. The high of that bar to try to go higher. Did not have enough gas. Squeeze, even on the quarterly chart. Told you we didn't have enough gas because it was red. That's a major disconnect. Right? So think about this for a second. My price chart is telling me something about price and buying and order flow and all of that stuff that creates like price. But the squeeze really for me is giving me like volatility. So the question is the way that price moving, does it align with volatility or is this the fake? Right? You got to have something to compare it to as a base. Which matters more, price or volatility? Which one controls the other? Which one is stronger? Which one is the weighted, right? Which one is weighted higher? It's volatility to me. And I like debate. So if I had a debate and I could go to like the traders debate conference or something and debate with whoever, like, yeah, I would debate that volatility all day. Matters more. I think I could prove it. I think I am. Even now. Intel, Apple, Cocoa. Intel, Apple. Oh, matter of fact, let me see. Wait, let me say those names though real quick. I like when people shout me out. All right, I'm that person. I like when people shout me out. I do. Wait, let me find something real quick. Oh. Streaming. Wait, hold on. I'm trying to find something. Oh, there we go. Oh, okay. I was just checking to see if I had any new comments or questions, which I don't. I was just double checking. Give me 1 second to go here. So Shelly, appreciate you for giving me crowd. Misha, I looked at Lily for you. CVS, I think you're on right now, so I looked at CVS for you. Ford, was Cherokee. She said, "What's the name of the podcast?" This one, it's just Inside of Trading. Inside of Trading. And I still talk about investing, but it's honestly, to me, it's not the same thing. But clearly, the way I view it, the way my system works, it's really the same thing. And investing, of course, is easier, right? Because there's less need for you to have perfection. But if you still can, right, know when the volatility is high, then that matters, right? Let's see. Let's see. So, Dave, I looked at Lucid for you. Mike, I looked at Tesla for you. Thanks for giving me that one. Hip Win, I looked at Mara for you. Dwayne Talbert, I'm gonna look at Intel for you now, and then Chris Jones, I'm gonna jump over to Apple. Intel and Apple. Okay. Okay. INTC. Intel. Quarterly chart. Pushed up. Was in a downtrend. Tested the 1. Tested the 20. The average could not go higher. Went back lower. This bar right here. Right. And think about this. On a quarterly chart, breaking the low of that bar, that's actually like I know it may be a little controversial or like contrarian to your mind, but if this was a 5-minute chart, I would be short right there, expecting us just to go back down and break the low, which we did. All right, so we're on a quarterly chart. So what I'm saying is I know to think about buying puts 2 years out is like, ooh, do I want to bet? Like even on a like moral level, do I want to bet on like the company going lower? Because that's not a good thing for the company. People lose their jobs, blah blah blah. Right? It's not necessarily the best thing for the people. But the chart though, the chart is saying really good chance that we go lower, right? So Intel's having some trouble. If I go to the week chart, you kind of already know. All right. Underneath our 200 again. Underneath that 200 on a weekly. All right. Crossed it here back in, what is this? January of this year. Intel is dropping. At the same time, beginning of the year, S&P is taking off. When things don't connect to the S&P, I just leave them alone. I do. I want everything to look exactly like the S&P or better. Because if you really study and master and just look at the S&P every day, every week, whatever amount of time you have to look at it, it just, I think, is going to make selecting other stocks very easy. Because you'll just see, like, you know, and you may disagree with, like, that philosophy. That's cool. That's totally cool. But at least have a philosophy, right? So we pushed up there, got stuck for a while, right? Bands start to get tighter, volatility is getting tighter, and then collapsed. Pushed back up to the 20, collapsed. All right. So a lot of signs that this was already bearish. And being under that 200 on the week, really, really, really troubling sign. That's not good at all. It's not good. Especially when the stock market is making new highs. That's a big disconnect. Big disconnect. Hopefully that makes sense. Big disconnect between the S&P, what everybody's looking at, what everybody pays attention to, what the VIX is literally based on, right? That fear gauge is based on the S&P. Got to look at the S&P. Got to, think about it as you pick the stocks you invest in and trade, right? Okay, let me check this for a second. Chris Jones, Apple. Crystal, I'm not gonna look at SPY because I already looked at SPY. Chris, I'll actually look at NVIDIA instead. NVIDIA, and then Andre Green wants me to look at Coco, which I forget what the hell Coco is. That's why I keep saying Coco. Chris Jones, NVIDIA. Okay, NVDA. I'll do it again. Quarterly chart. You know this is NVIDIA though, right? So, very, very strong. Again, you can see how volatile it is because of how big, how strong this bar pushed away from the one. Right, that's crazy. And there's like, I could go further. I could take the one band off, use a different standard deviation to kind of explain this type of volatility more. This one's really rare. Right, NVIDIA is incredibly volatile and it's incredibly large. Its market cap is huge. So this is like Shaq. This is like Shaq with the speed of Allen Iverson. It's a monster. You can't do much with, right, playing against Shaq. You want the Shaq who has the speed of Allen Iverson on your team. Right. We posted in the room on Monday. I think my cousin Joel posted and asked people, hey, what stocks, because of this quick flash crash, VIX hit 54% volatility, low, going to go back up. All right. Even though we're in a bear season, which we still can go lower, doesn't mean we're not, right? We can't go lower. We can at any time. But 50% of the people in the room said NVIDIA was what they were excited about. All right. So if I go to the week chart, back here this week, 415, that was when the VIX also kind of popped up to 20. VIX spiked, should have been watching the VIX, dropped, got close to the 20, didn't even really get there. VIX teetered off, got back to that low volatility, 16, 12, 13, very low. Not moving a lot every day, but also not a lot of struggle. All right, so low volatility doesn't necessarily mean you can't make money. It just means there's not like a lot of both sides fighting. So back to highs, new high, new high, new high, new high, new high. Even though the VIX during this period had low volatility, new highs. All right. And you see what happened here. We crossed back inside the band. We ran down to the 20. We gapped down. A lot of stocks look exactly like this. The break inside the band was the same. We crept back in, touched the band maybe 1 or 2 weeks, and then because of Japan and the VIX spiking, usually there was a gap down, and then we just literally are pushing back up to the 20 on a lot of stocks. That's the same exact pattern. For me, it's the same pattern, right? Because of my system. So NVIDIA is one of those that probably a little bit different than everything else I've talked about. It even at a larger perspective is, I've been saying strong volatility. This one has hyper strong volatility. It's that, right? And I know they did their split recently. They were up like $1,000. I know they hit that high of 1,000. Now it's like, why is it 140? Because they did a split. So the question with splits is always like, well, will it have the same bang for its buck? Will it move the same? Like, will it really have that, right? Will it have the same will it be the same stock after? As of right now, yes. From what I can see, from what I've been able to see, assess, analyze, yeah, it's still NVIDIA. All right. Just this week, we jumped. How much did we move this week? From the lows of this week, we were up 20%. Most of your favorite stocks are not up 20% just this week from the low. All right, so NVIDIA is still, it's still NVIDIA, right? Okay. Let me find something new. Coco. And then Jeanette PLTR. Let's see, Andre Green, Coco. Oh. Okay. Oh, Vita Coco. Okay. Must IPO back here. Not a lot of data yet. Don't even have Bollinger Bands on them or the squeeze because we don't have enough data yet. Think about that. We don't even have enough information yet. This stock is a baby. I don't even have enough information on this quarterly chart to really assess anything with my tools because we don't have enough information. All right. This is like go on the second date. Hell, go on the first date. I don't know. I haven't talked to her that much. I don't know. I don't have enough information. I don't know if I want to go on a date with this stock. I don't know. All right. Now, if you're like, hey, forget all of that. I love IPOs, blah, blah, blah. I don't want to wait 20 quarters, which is what? For 5 years. I'm not waiting 5 years, Noble, to like, okay, cool. You don't have to wait 5 years. Let's go to the weekly. And we have information on the weekly chart. So you can see it. Nice push up, and then we've just been in a ugly. Oh, I loathe ranges, y'all. You know anything about me? It's ranges that I hate because we can't. I would rather just lose than be in a. Well, no, I'll take that back. I wouldn't. Maybe I would. Would you rather be in a really, really long range, going nowhere? Can you psychologically stay in a trade where it's literally just ranging? I think that's almost harder for some people than losing. Because at least if you lose, you know. Right? We're afraid of the unknown with trading. It's the unknown. Like, same thing with the VIX. So long ranges are like, I hate long ranges. I really do. But you can't avoid them, right? You don't know when it's going to happen. Yeah, I don't have a recipe for necessarily predicting other than when the squeeze gives me a red dot, which, as you can see, there's a lot of red dots right in here, so it makes sense. The volatility got so compressed and tight. Nobody's really putting size on the table buying either one way or the other. So we're not going to get a trend. We're just going band to band, up, down, running back up, back down to the 20, trying to get up, right back. Like we're not. Now, the good thing is this. If I go to the month just to try to change the picture a little bit. So we bounced off the 20 here. It's still bullish. We're trying to. We tested 30 several times. We just cannot seem to break 30. Right there is good old 30. 1, 2, 3, 4, 5, 6. Like 6 times we've tested it in the last, since June of 2023. All right, so the last year we've tested it, but just have not been able to get higher. We're still bullish. But it's struggling to get the type of volatility and buy-in, that we really need from the market. And then you can see how like the band towards the end is getting a little tighter. If this range continues, what's going to happen is we're going to get really, really tight, and some sort of catalyst is going to have to lift it out. You're going to get a breakout. We're going to shoot up or we'll like drop. That's really the only thing that can happen in this scenario. It happens all the time, right? All the time. So I can kind of tell you if this doesn't change, even when I have the squeeze, we'll start to get the red dots. The volatility is going to be tight. That's what those bands getting really narrow means, right? That's what it means, is you shouldn't expect a trend, right? So you may have to, it may be, be patient with this one, right? It's one of those that, you just have to be patient with because it's not really giving us, it's not connecting to the S&P, which has been hitting just new highs all year. Like it's been a real smooth year for the S&P. It really has, right? So this doesn't match up. Just think about that. Think about that. Okay, let me go back. That was for Andre Jeanette, PLTR. So if I go to a quarterly chart, don't have enough information. Again, IPO. Tested this bottom down at about 10. All right. Pushing higher. Let me go to the week to get some actual information. Okay. So the good thing here is that every time we like touch that bottom band, we push right back up. We'll come down to the 20, gets a little tight, get a pop. All right. Back down to the 20, ranging, get a pop. So I would love if this one, like right in here, it had more of this. All right. I would love that. That would make me feel really good. Like if I'm looking at this new, And because I know a lot of you guys will look at a stock and think about it fundamentally. You'll think about the industry, you'll think about competitors, you'll think about all of that stuff, which is totally cool. But for me, because I'm such a technician with a statistical lens, like I'll go here and I'm just like, right? And I'll just look back for years. Did it ever even have the type of potential to look like an Apple or Tesla in its heyday a couple years ago? Like, those are just, to me, the stocks that I prefer. But and I'm kind of speaking about, I'm thinking like about this right now as an options trader. The show is called Insider Trading, not inside of slow, long-term, basic, easy, fifth grader investing. Keep buying the S&P every year. Matter of fact, buy NASDAQ or XLK every year. That's all you can do. You'll be a better investor if you just do that for the next 10 years than trying to be this amazing stock picker, right? You're probably not going to beat NASDAQ. You're not. Very few people can and do, right? Very few. And I mean hedge fund managers, right? Like that's what the data shows. So again, what I like is it seems to kind of get stuck in these little ranges right around the 20, but it's never actually going bearish. That's the positive. That's what I love about this. And this is the week chart. So, all right, there's a pattern here, right? It's not giving us these long, strong uptrends, but it's still giving us some clarity on there being a certain level of support and buying from the people that really rock with this stock, right? You can see it. Matter of fact, if I had to like draw it right in there, and then we just range in there, and then we're just like, yup, range in there, pop. Come back, range in there, pop. Range at the 20 for a while, pop. Let's see, did they have earnings or something recently? Let me go to the hour. What happened? Okay, yeah. So right here must have been earnings. Must have been earnings. Yeah. So must have been good. Looks like it was positive. I have no idea. You got to look and you tell me. Right. Where might we go right now? I don't talk about this I do. I'll share this one really quick. Dang. No, I'll wait. I'll say this for whoever asked me about PLTR. Have some fun, explore. I'll teach about it. I got several videos on this one. You're gonna love it. But if you use Thinkorswim, even if you don't, Google Woody's pivots. Google Woody's pivots. Thank me later. All right. Where is a stock like this going? Look at the Woody's pivots. Amazing for targets. Amazing for targets. Let's see. Shanika Jackson asked about race. Shanika asked about race. Oh. Yeah. Okay, so this is Ferrari. Looks like they IPO'd back in 2015. Didn't have the data. Once we got the data where those bands started above the band, all we did was pull down, what is this, April 2022? Same thing the S&P did, which is nice, perfectly at its 20. That's exactly what the S&P did, same year. Again, I like the stocks that move with the S&P. It's less analysis. It's less worry, right? Got back above, clearly pushed back above the one, higher ranging. If I go to the week, so we're in like period of strong volatility or where we're getting strong volatility. And the week right now, check this out, bands getting super tight. And see how down here at the bottom, the squeeze is giving you those red dots? Even here, before those red dots happen, when this is starting to pinch, you already know. I already know what's going to happen. My students already know. The squeeze is going to give you those red dots, which for me, generally speaking, is either saying don't take any trades because you're not going to get a trend, or think about it like you're just kind of stacking, getting ready for a move that will come, but that's not coming yet. It's called a squeeze because it's like basically like pipes will squeeze and bust. At some point, like we have to move. All right. But as you can see, this is just top band, bottom band, top band, bottom band, top band, bottom band. We're not getting a trending move because we don't have enough volatility to trend yet. And if I go to the month, just to at least get myself. So yeah, so the month is right. Beautiful. Bullish. I know you see these dark blue bars. Yeah, they're dark blue. That means, right, it's like volatility weakening, but it's still strong, right? Like you should worry about these when the bar is like half the size of its highest candle. These are still right there. Still bullish. We're just ranging, right? So, and the longer we range, people tend to lose a little hope and faith, right? Traders get a little antsy when we're forced to wait a really long time, right? So, but looks good. Just tight right now. Don't know which way it wants to move. Probably. Usually what happens when we have these like rangy tight periods, we normally just explode or squeeze to the side that we previously had the volatility moving towards, which was bullish, which you already knew that anyway because I showed you the month and we were above the one clearly every single month for the last, what is that, from January of 2023. So from this high, we rose about 73%. And that is about 20 bars, 20 months. So almost 2 years, 74, 75% growth. Once we got above that top band, that's when we took off. So I like it. Excuse me. Let me see. Google. Should I look at Google? Maybe. I don't want to look at that word. Oh, Crystal Williams. Hey, Crystal. She said, how would you use Bollinger Bands on the 4 hour? Same way I'm using them on every other time frame. It doesn't change. What changes is you have to think about it. It's like there's more information in a week chart than a day chart. So I am saying that like I use my system the same way on every time frame. My entries are the same, whether I'm using the quarterly or the 1 minute. It's the same entry for the same reason, right? And again, it took me like 13 years to get here, right? But I was always kind of like, the way my brain works, I was always navigating towards designing, building something that like it could be uniformly taught and everybody would have the same trigger, the same entry for the same mathematical reason. Like I really kind of like early on really wanted to build. I just believed I could build a better system than anybody previously before me had. Supply and demand is not this precise. It tells you nothing about volatility. It's just lines kids could draw. Anybody can see support and resistance. All right. Supply and demand is like, which specific candle and why? Where do I have the highest chance? You don't get that from most, some of the more popular, systems that are out that people learn. It's just, it lacks something. Right. Unfortunately. But that's why I'm here. That's why I'm here. That's race. Wait, which one did I want to go to? What did I want to go to? Oh, let me see. Jarrell asked about Google and PANW, which I can't think of what that is right now. So let me go back here. PANW. Oh, Palo Alto. Okay. So I'm going to take everything off real quick. I'll go to the quarterly again. I don't even have to say it now. You can do the analysis for me. Is this beautiful or is this ugly? Is this what you want to see if you're bullish? Or is this like, is this a stock that's struggling? We got above the top band back in April of 2020. Higher, range, higher, range. Range for about a year. Now look at that. So for about a year and a half, just got stuck. Year and a half. A whole year and a half. So imagine if you're trying to trade this on the day chart, weekly, whatever, options, but you've never even looked at the quarterly. You're not even aware that you're in a range because you just won't take 25 extra seconds to just look at a higher time frame. This is why the higher time frames, I think, are really, really key. All right, so we pushed above. Oh, my bad. I did it again. I'm sorry. The range was right here. Ranging. All right, over a year. Higher highs, pull back, higher. Still pushing. Kind of ranging now inside of this one. If we can get above this though. Like this candle right here with those candles with really long wicks where we had a lot of buying, but then a lot of selling as well. If we can get back above that, that's this thing can really take off. I've seen it a million times. I'll go to the week to see what's up on the week. I don't know what happened here. It should stand out to you like same way it stood out to me. So I won't even draw it all the way across, but clearly, as you can see, whatever happened there, February 19th, that week, we still really haven't recovered from. Just been bouncing inside, hit the bottom band, hit the top. Really couldn't take off. Just never got. And think about this for a second. Think about this, like for 1 second. This candle here, above the one. Yeah, no, but you keep saying above the one, but it didn't take off. Yeah, it didn't take off, but it also never broke the high. So you never would have had a trade to get in anyway. Right? The way my system works, like the one candle that is the trigger for me that's the candle. If it breaks the high, we're going to get in, and my stop will be like literally that same candle is what matters. If we get under that candle, I'm getting out. So it really is like a 1 bar entry and exit. Your entry bar should be the same bar that kind of tells you if we go under it, the fundamental reason we got in the trade is no longer existent. So why would I stay in the trade? But here, even though that one little candle that week, 624, pushed up and gave us where we wanted to be, it never proceeded to go higher. It never got anybody else on board because anybody with orders at 348 or 349, you never got in. Range, dropped. All right, so, yeah, but I don't know what happened back, So you got to figure that out. And I mean, clearly, you would have assumed back here, you would have assumed that we were about to run back to these highs here. But you need volatility to get there. All right? Need some volatility to get there. And we just got stuck inside of this bar. I'll even say this. I'll go as far as even saying this. And I say this in all my classes. Whenever I see a bar like this, if we don't break the high or the low, to me, all 1, 2, 3, 4, 5 of those weeks, to me, is one candle. It's one candle that gave me a high and low that we never really went anywhere for 5 weeks. That's a 5-week, 1 week candle to me. That's all one. All right. Then we proceeded to go lower, tested the 20, gap down because, right, the VIX hit 50. But this here, even though it's 5 bars, to me, that's just one long bar. That's how I think of it. Because it's not doing anything. All right. Okay. Let me check something real quick. Check something. Because I got, where is it at? I'm just trying to see. I know I got a few more people that said something on I know a few people that said something. Oh, Andrea, did I have anybody else that jumped on later? Nope. Okay, Andrea, I'm gonna go. I'll give you I'll do yours last. Arm Holdings. I'll go to the quarterly. Take everything off my chart. They don't really have that much data. Only been around for, what is this? July 2023. So a little bit over a year. All right. If I go to the week and zoom out so we can get some perspective. Let's see. I've never looked at ARM, so you're getting like fresh reaction. It's not bad, right? I see this bar and I'm like, we got stuck in there. So we made this high. Some good news happened, and then we just couldn't sustain it. Now that's a pretty big move, right? So let me see how. You see from the low, well, from the open of that candle to the high. So it jumped up 40% in a week. That's why you're probably looking at ARM, right? Because it has that type of potential to move 40% in a week, which is crazy. So I get it. I instantly get that, yeah. Pull back to the 20, slowly got back outside of that candle now. Got above the band, took off, pushed a little higher for about 1, 2, 3, 4, 5, about 5, 6 weeks. Doji at the top. Confusion. I used to have a trade. I would never tell you to do this, so don't do this. But me and my cousin used to have a trade. We tried so many different strategies. Oh my goodness. We tried so many strategies with futures years ago when I first started trading, 2010, 11. One of those strategies, y'all, it was like gambling. It was literally, if we see a doji, we're going to place an order above and below. Because if a doji fundamentally is confusion, then wouldn't it make sense that breaking the high or low, getting outside of that area of confusion, we should get like direction? All right. I'm not saying do that. I'm really not. I haven't done that literally in like 12 years. But I still see a doji at the high and I'm thinking, confusion. Something slowed the market down. We didn't for a whole week. We opened where we closed, or we closed where we open, right? So that's a little tricky. That's not good. It's not tricky. It's not what you really want to see. Again, same thing. S&P crept back inside the band, breezed through the 20, pushed a little lower. Everything's kind of pushing up because we gapped down so hard, and the VIX was a great buying opportunity. Oh shoot. Yeah. Okay. So I clearly will get better with making sure I'm on the chart when I'm talking about it, but I literally have not done any lives for a while. So thanks for the grace. Give me a little, because I need it. I always want to show you guys what I'm talking about, but I got to figure out a way to remind myself to go back to the chart. Because sometimes I want to say something to you and I want you to see my face. You know what I mean? I want that human connection. I don't want to talk on my charts all day. So what I was showing you, you kind of heard it, but I'll just real quick fly back through it. This was that 40% week. We ranged inside of that for a while. Then we got this really ugly week, which we ranged inside of that for a while. Finally got above the 1, 2, ranged a little bit, went higher. All right, see how we had this doji? All right, we had this doji and we ranged inside, and then we did get a strong push. We did push higher. But then we got another doji. So we really didn't go too far. It's pretty close. And then, last few weeks, just connecting to the market. Looks just like everything else, for the most part, that I've shown you today. Kind of pushing right back down. So let me go here for a second. Let me try to find. Oh, okay. JQ said, thanks for your time and expertise. No great information. I need to sign off now. Bye. Okay, see you later. Have a great night. JQ, have a great night. Okay. I think that's it for tonight. So here's what I want you to do. Please, please, please subscribe to the channel, because you need more information. You need it from somebody who loves what they do, can explain the math, has an MBA, is not out here just creating classes and throwing together stuff because people are at home trying to figure out how to make money. I have a recipe and a blueprint, and it's based in and grounded in something. My classes are legitimately 80 to 90 hours. Futures is a little bit different. I think my options class is a little bit longer. because you got to learn strike prices and all of like you got to learn right all of that stuff. With futures, it's really just you got to learn these technicals and this statistical method that I use, right? But futures is a little bit less involved because you don't have to pick strike prices, right? So it's a little bit less in terms of the time. I got 2 classes coming up. I'll be starting the class. It's in September. So I'll probably next Monday for sure give you more details, have some links where you can actually learn what the class entails. It's a premium course. It's going to be over 5,000. If that scares you, just keep watching the free content. I want to give you as much as I can, but for the people who are ready to like really upgrade their commitment level, you got to dig in. Like there's so much more I can teach you in class that I can't teach you here. I can't give you homework here. I can't have a group discussion here. I can throw out things on the fly, but I can't quiz you on something that maybe I just want to like test you on that happened this week. Right? There's so much more that somebody like me can actually do in a class. But again, premium, love what I do, no pressure ever. I'll let you guys know about those, but please just keep watching the channel. Share it with somebody that you know. You'll start to kind of get what I'm doing if you just keep watching. But there's still more than what you're just going to see here, right? So I don't want you to think you can just watch the channel and master my system. You'll get the mechanics, you'll get the principles for sure. You'll get a lot of it, but there's still some fine-tuning things that only come from like that time with me in a committed class with people who have also committed, right, to a higher level, right? Making you money is the least of my worries. That's the least of my worries. The system works on every time frame and every asset. I could teach foreign exchange tomorrow. I just don't trade Forex anymore. So I can't really like, it's an integrity thing. I can't say like, Forex traders, I want to help y'all too. And I do because the same statistics work on everything. It's all just data. So keep watching. Join me next Monday and Thursday, and then we'll do it again for a couple more weeks in this month. I wanted to kind of give a lot more in this month. I'll probably continue to come back to do insider trading 2025. It'll probably be like every Monday, maybe every Monday and Thursday. I don't know. I'll figure that out. But if you're still here, you enjoyed it, man. Thanks for watching. Again, share this with somebody that you know and that you love. If you need me, feel free to reach out. You can also go to my website, limitlessclass.com. And if you're not in Inside of Trading on Facebook, please join. It's free. There's tons of people just like you, regardless of where you are. There's somebody just like you who's just like me, who needed to get better, who was losing for years, who could not figure out with all the people and the books I had read. I tend to go to books more so than classes, but I really have had an amazing journey and figured a lot out on my own. So there's a lot of custom things that you'll get from me that I don't think you'll get from anybody else literally in the world. It's been my unique journey. And I just want to help you make more, right? And see things clearer and be more confident and more patient. You shouldn't always be trading. Just because you pull up the stock does not mean it's even in a place where there is a trade, right? Or there's a potential for you to really make money. So a lot more to teach. I got hundreds of videos coming across the next year. I'm excited. I am. I'm so excited. Thanks for watching. Join me Monday. I'll make sure I talk about time frames, right? If you work a 9 to 5, which time frame should you be trading? It's not the day chart just because everybody looks at the day chart. Which time frame matters the most for you? If you're a day trader, why should you consider the 30-minute? What are the advantages to the 30-minute over the 15? What about the advantages of the 5 over the 30? It's pros and cons. I can walk you through all of those because I've literally traded both for years, right? So a lot to cover, a lot to teach you guys. Again, thanks for joining me, and I will see you Monday as we go back inside of trading.